This is Elliot Eisenberg of Graphs and Laughs here to catch you up to date on the latest in residential sales data for Hillsborough County. In Hillsborough County, single-fam home prices went up 2.4%. They went up a stronger 3.4% for multifam, and that was the strongest multifam price appreciation performance across all three types of counties. Sales activity increased 3.2% for single-fam units. That was the best single-fam performance across all three counties. It declined 3.8% for multifam. In terms of sales price as a function of list price, it declined for both types of properties. It fell to 97.5% for single-fam. That was the highest sales price as a percentage of list price across all three counties for both types of properties, and it declined down to 96.8% for multifam. The fact that the percentage declined for both types of properties while prices were appreciating means we were expecting prices to go up, I think, a little bit more than they actually did. They went up less than we expected. Pending sales activity fell 4.2 for single family and a larger 16.5 for multifamily. Lastly, inventory continues to expand dramatically across the county for all types of properties. Here in Hillsborough County, they went up 76.5% for single family, with now we have a 3-month supply of inventory, and up 141.2% for multi. That was the largest increase across all three counties and both types of properties, and now there's a 4.1 month supply. In Pasco County, single-fam home prices went up 3.6%. They went up just a little bit more than 0.2% for multifam. In terms of sales activity, it went up 2.8% for single-fam and a very strong 10.3% for multifamily. That's the largest sales activity increase across all three counties in both types of properties. For sales price as a function of list price, it declined to 97.4 for single family and remained flat at 97.1% for multi. Pending sales activity on the single fam side fell just 0.3%. That was the smallest decline for both types of properties across all three counties. Multifam went down a little bit more, 1.1%. That was the smallest decline for multifam across all three counties. Lastly, inventory continues to rise dramatically in all three counties. It went up 87.5% for single family, leading to a 3-month supply of inventory here in Pasco, and up 70% for multifam, giving us 3.4 months supply of inventory. Inventory is rising quite dramatically. In Pinellas County, single-fam home prices went up 7.8%, the strongest performance across all counties and both types of properties. Multifam sale prices fell 1%. If we turn our attention and look at sales activity, it fell 2% for single and a little bit stronger, 13.6% for multifamily. Turning our attention to the sales price as a function of list price, it declined for both single and multi. For single family, the ratio is now 95.8, whereas for multi, it's 92.8. And this decline suggests that while prices have generally increased, suggests that people have been thinking that price performance would be better than it actually is. Pending sales slipped 1.3% on the single fam side and 12.3% on the multi-fam side, while inventory continued to increase here like everywhere else in the area, up 111.8% on the single fam side. That was the largest increase on the single fam side across all three counties, resulting in a 3.6 month supply of inventory. On the multi-fam side, inventory went up 93.5%, leading to a 6-month supply of inventory. Turning our attention to the national economy, GDP growth has clearly weakened. In Q1, it was 1.3%. In Q2, right now, it's looking to be about 2%. This is a far cry from what it was in the second half of 23, when it was double or close to triple what we're experiencing right now. As a result of that, unemployment is rising and inflation's falling. On the unemployment front, unemployment's risen from its trough of 3.4% a little more than a year ago to 4% right now. That's gone up a little bit more than I would like to see. It's making me a little bit nervous. I'm paying close attention. On the inflation front, inflation continues to decline again, and that's good news. There were a couple of months there in early 24 where inflation seemed a little bit stagnant. And as a result of that, the Fed got nervous, markets expectations declined, and interest rates didn't go down a lot. That said, we've seen interest rates decline quite considerably over the last couple of months as inflation again has begun to come down nicely. The 10-year Treasury's fallen from 4.7 to 4.2, and sympathetically, the 30-year mortgage has fallen from 7.2 to 6.9. Nice progress. And I expect that we'll see more progress, and as a result, we'll get one, if not two, interest rate cuts. But it depends entirely on the speed of how fast and how much interest rates fall. Remember, the Fed was badly burned in late 21 and 22 when they told us inflation wasn't a problem and wouldn't last very long, only to find that inflation increased year over year in July of 22 by 9.2%. So the Fed's holding back and waiting. That said, I expect to see at least one, if not two cuts. If we get one cut, it'll probably come in November. If we get two cuts, we'll get one in September and one in December. Each will be a quarter point. I'm somewhat optimistic we'll actually get two cuts. That said, my biggest fear going forward remains the fear of a possible recession. Unemployment is going up, and historically, unemployment rising like it has resulted in a recession. That said, the resiliency and strength of the U.S. economy, and in particular U.S. consumers, has kept recession possibility at bay so far. Let's hope it stays that way.